Good morning, everyone, and thank you for joining the Colleen EDC Coffee Chat, Coffee with Colleen. We are really pleased to have the President and CEO of First Fed Bank on with us this morning, Matt Deines. Thank you, Matt, for joining us. Just a few housekeeping details before we get started. If you would please put yourself on mute so we don't inadvertently pick up any background noise. And if you want to ask a question, you can either put your question in the chat and we'll read it for you, or you can raise your hand and we'll call on you. So with that, again, Matt, we're honored to have you, not just here on Coffee with Colleen this morning, but also in our community. And First Fed's been a ball of energy and excitement and growth since I think you came on board. So we're really excited to see that and be a partner with First Fed Bank. So thank you and take it away.
Thank you so much, Colleen. I'm really glad to be here. You know, I think that when I started about 4 years ago, I actually started in August of 2019. And one of the first things that people talked about was you know, the fact that we had this 100th anniversary. So I'm particularly proud that we made it to this point through an unprecedented 4-year cycle, you know, whether or not it was going through a pandemic, all of the interesting response and the impacts to banks and people financially with stimulus programs and PPP and all the things that we did in 2020, you know, tending to a pretty benign period in 2021, and then getting into 2022, where, you know, all pretty much anyone could talk about was inflation. And we saw the beginning of the interest rate tightening cycle and higher interest rates. And now here we are in 2023 in a much higher rate environment. And, you know, it's been like 4 different economies in each of the 4 years that I've been here. Nothing to do with me, obviously, but really an interesting period of time. And yet, when we look back historically over the history of First Fed, and we think about the fact that this was founded in 1923, and you think about that period of time, you know, that was right on the dawn of the Great Depression. So we had this bank that was founded right before the Depression, went through that period of time, the Second World War, the Korean War, Vietnam, all of the activities of the 80s, the S&L crisis at the end, you know, going into the, again, pretty nice period for the economy in the 90s, you know, through a terrorist attack in 9/11, the great financial crisis in 08, and then the pandemic. I mean, this bank has been through all of those major events in history, all right here in Port Angeles, and something that was very consistent throughout that period of time. You know, I'm particularly proud of the fact that we made it to this first century, and very excited about our second century. But I will tell you that there's very few companies that have made it this far. And for me, I lucked out, right? I got to come in at the tail end and kind of ride into these 4 years and be here at this period of time, which is very humbling and gratifying, and something that I've really enjoyed. The thing that I'm so grateful for now is when we go to events, to have the opportunity to see so many of you, to have had the opportunity to work side by side with you. The work that I get to do as a board member of Field Hall, and some of the exciting things that are going on there. I know Mark Fisher and maybe a couple of other board members have joined today. It's really fun for me now, because that first year when I was starting to try to get to know people, everyone was at home, and it made it very difficult. But now it's so exciting to be a part of this community. I feel like a part of the community, and I appreciate the kind words that Colleen said. You know, I definitely still have a lot of energy, although like I said, it's been a really interesting and fascinating 4 years, and I'm very excited for what's to come. But what I'm particularly excited about, and what I'd love to talk about today, is our 100th anniversary celebration that's coming up here in less than a month. And we are going to be celebrating down at and around the Field Hall. We are really, really thrilled to have the opportunity to celebrate there. So excited that the hall is open, and it's something that we had talked about for a really long time, and we were hoping that the hall would be open. And quite fortunately, it is open. Let me get my other display on here. I'm so sorry. Mhm. I'm going to figure this out, guys. Hang on just a second.
You're really close.
There we go. All right, I picked the wrong screen to share. There we go. So at any rate, we're really excited to be celebrating there. I'm hoping that we get back to the summer weather and the Indian summer weather that we typically have around Labor Day. Regardless, we're going to have an unbelievable event. Again, that date is September 3rd, which is a Sunday, and it is Labor Day weekend. And we realized, we talked a lot about what the appropriate date was. Our actual anniversary was in March. We talked a lot about what the appropriate date was for the anniversary, and we didn't want to conflict with Crab Fest or the opening of Field Hall or so many other events that we have here in the summer and early fall. And so we picked that date knowing that if we let people know far enough in advance, hopefully people who are from the peninsula would be willing to stay. Hopefully a number of people from around the area, people who are familiar with the bank, some of our employees who live over in Bellingham or the Seattle area or down in Pierce and Kitsap County would be able to make it up and make it a weekend of it. And so we've got a big group of folks who are coming in, but we're also really excited to host several of you who are from the community, whether or not that be anywhere up and down the peninsula. We're so thrilled to be offering this event. Again, it will start at 11 a.m. It's going to run all day. It's going to be a jam-packed day. I'll go over that in a moment. And it's free. We do have some food trucks and a beer garden that will be serving beer and wine. That obviously people will have the opportunity to purchase those items. But the rest of the event is free. All of the performances are free. All of the kids' activities are free. We've got a number of nonprofits in the community who have been so awesome to partner with us on the event and to help us to make this an unbelievable activity. Our goal, really, when we think about it, we want to celebrate with our team members, both current, past, board members, current and past, our customers who are so important to us, who mean everything to us. We are the #1 market share for deposits in Clallam County, and we do not take that for granted. It's so important to us. We are a customer-centric organization. That's the most critical thing. Our purpose for being is to delight and take care of our customers and to try to improve their lives every day. And that's really something that is a part of our mission and a part of who we are. But we also want to celebrate with the other community members, the people that we stand shoulder to shoulder with every day out in our community, trying to make it better, trying to help make this incredible area just continue to thrive and shine. So we definitely hope that folks who are around, staying in town for the holiday weekend, will come out and celebrate. We think and believe there will be a nice group of people coming from outside of Port Angeles, folks that we've invited, family members, et cetera. We think this is going to be a tremendous opportunity for a lot of the small local businesses in Port Angeles. We think there's an opportunity for us to showcase some of our customers and help take care of them, both business and not-for-profit. And we kind of think there might be as many as 5,000 people there. Hopefully not all at the same time. Having an event that spans about a 10-hour window allows for us to do that. We get that type of activity through the city on the 4th of July, definitely on the weekend of Crab Fest, through other events and activities. And so, we'll see what happens. We don't have RSVPs for this, so it's really going to be interesting to see how many folks come through and attend. And I'm hopeful that it's a barn burner. As far as the schedule itself, we'll have food trucks that are going to open up at 11 a.m. People can start eating. I'll show you a map in a moment. There'll be parking zones. The beer garden will open at 11 a.m. We'll have last call at 8:30. Obviously, you'll have to be 21 or older for that. We think we've set that up in a way that's nice and central, and also be able to view the stage, I think, from parts of the beer garden, which will be really nice. As far as the field hall is concerned, the hall will be open at 11:45 for most of the day. There will be several activities going on inside of the theater at Field Hall, which if you haven't been in the theater, I know many of you probably have a chance to drive by the hall. And I know I sound like I'm pitching for Field Hall too, and I am. Get into that theater. Those seats are absolutely beautiful. The theater itself is incredible. The acoustics. It's going to be so exciting for some of our folks to be able to perform in that theater for the first time. Some of our local acts and talents perform that theater. That's going to be going on most of the day. We also will have outside near Pebble Beach, we'll have a stage set up. People can bring chairs and sit out on the grassy area, and probably be a lot of standing room as well for the 4 acts that we have going. We will have a kind of a limited area on the second floor for First Fed employees and their family members. But on the main stage, we'll have 4 acts, including Abby May, Lady A, the Snotty Nose Rez Kids, and then the Daddies. And the Daddies were quite a popular band. At one time, were known as the Cherry Poppin' Daddies back in the 90s. And their very popular song, Zoot Suit Riot, I'm sure they'll play that at least once. And it's going to be an incredible lineup. Abby actually works at First Fed. She is an absolute phenom. I mean, she's amazing, has a beautiful voice. The homeschool boys play along with her. We're really excited to feature one of our employees, who's also one of our performers, who will be kicking that off at noon. And that will, again, all be at Pebble Beach and down in that general area, just on the kind of northwest side of the property there, I guess, of the Field Hall property. It's actually on the northeast side of the property, but that northwest corner of downtown. So really excited for that. Also want to recognize a lot of our partners here. I won't read them all, but you can take a look here. You know, we've really gotten a tremendous amount of support from the county, from the city, from a number of nonprofits, as I've mentioned. The high school wrestling team is going to be out there. We got the big guns out there to help set up and tear down all the heavy lifting. And then the high school swimming team also will be helping us manage garbage and distribute water and those types of things. So really, really excited about that. And just very grateful to all the community support that we're getting for this event. We're going to have this Love Local Showcase, which I'm very excited about. I'm clearly excited about the entire event. But we're going to be having the ukulele strummers from the Olympic Peninsula. We're going to have Lori and others telling stories of resilience. Billy Price, who started Billy Shoes, Billy Footwear. If you have an opportunity to see anything over this day, I would highly recommend going to listen to Billy. His story is phenomenal. He is now a paraplegic who fell from a ladder when he was in college and started this company. And they're a great client of ours, a remarkable story. He's one of the most inspirational people I've ever met. Very moving speaker. And then Rob DeCou, who's an endurance athlete, who will also be talking. After that, we'll also have the Rhapsody Songsters, Studio 360, and the Washington Diamonds drill team. This is a big part of Field Hall, wanting to feature local talent and give them an opportunity to perform in front of audiences in an incredible venue. It's also a big part of what First Fed is about in our support of the local communities, local businesses, performers, and otherwise. So that's going to be a really, really cool event. All will be general admission. Folks can just kind of wander in, grab seats, and really get a chance to appreciate our new venue in Port Angeles. I also want to recognize Jan. I know you're on the call, First Fed Foundation, so many others in the community who are helping us set up activities and events. JFFA, Northwest Acts, we're going to have bouncy houses. We'll have Ollie there. Someone will be fortunate enough, hopefully the weather's not too hot, to dress up in the Ollie the Otter costume. But you can see all the great community support that we have for this event and people who will be doing different activities at different booths. I think it's going to be a really fun event for all ages, and really, again, grateful to all the folks here who are supporting us as well as the people who will be there on the 3rd. As far as the map, so this is interesting. I think, one of the big challenges we have in town, people talk about when we have these events, is parking. We have had really good support from the county and the city, as well as Peninsula College, and we'll be utilizing their parking facilities, and we will have shuttles running from both facilities. You can see the yellow route and the green route, and we'll be coming down to that event. I'm really hopeful that people take advantage of that. I know it's more convenient if you can find parking and walk, but that's going to be a tough sled on that day. So if you take advantage of those shuttles, I really highly recommend it. We also really wanted to utilize the entire space. We're very grateful to Blackball. They're giving up a little bit of some of their conventional parking on a very busy weekend for them. We've tried to create specific parking opportunities for them. You can see down in the bottom left. They'll be utilizing some of the field hall parking that day for ferry passengers who are obviously heading over to Victoria. But this is the layout of the event. So you can see Pebble Beach, that will be where the music is. You can see where we'll have some parking and restrooms. There'll be an old school fire truck up there off Railroad. A number of other activities all along Railroad and Oak. And then food and beverage in the middle there on the bottom, the shuttle drop off. And then of course, a lot of kids zone activities. We'll have non-alcoholic. I'm pretty sure it'll be non-alcoholic where the kids activities are, other food trucks. It's really going to be absolutely fantastic. And I'm very, very excited about that. So again, please mark your calendars for September 3rd and plan to be there. Come for the entire event if you can, or just come for some or all of it. Again, there'll be indoor and outdoor activities. And I'm really grateful, Colleen, to you to have the opportunity to talk a little bit about this and share with the group and continue to get the word out about this a huge celebration next month.
Well, thank you, Matt. That's really exciting. And we're just so glad that we have such a strong community. We have several strong community banks in our community, but the First Fed has been such a presence in our community for so long. So longer than I think any of us have been around, right?
I haven't met anyone who opened an account in 1923 yet. So
yeah. Right. So does anyone have any questions for Matt? And are you willing to take questions outside of the event? Or
I'd love it. I know we have time. I'm usually not known for my brevity, but I know we have a little bit of time. So it's open forum, fire away.
All right, very cool. So I guess I'll kick it off. And this is outside of the event, of course. But so I was just reading recently about a couple more banks that were downgraded, and overall Fitch downgraded the US I guess bond system. Is that right?
Yep.
And so I'd love to hear you comment on that. And just
sure.
Overall, banking is part of our economy.
Yeah, absolutely. So let me start with the U.S. downgrade, and then I'll talk a little bit about some of the community banks or the regional banks. Actually, before I even do that, I want to say one thing. It's funny to me when I read about small banks and they're talking about U.S. Bank or PNC or some of these huge key bank, and they're calling them small banks, and they're comparing them to the money center banks, the B of A's and the Chases and whatnot. I don't think anyone else in the community, Carol, you can probably speak to this, thinks of those as small banks in any way, shape, or form, right? Banks like Kitsap and First Fed and Sound Community. I mean, those are true small community banks. And there's banks that are even smaller than those three that I mentioned. So I always kind of laugh when I read that, but these are the banks that were downgraded are larger, much larger, 10, 15, 20 times larger than First Fed or Kitsap. And there's a place for them. And so at any rate, to get back to the US, when you think about it, a lot of people I heard mention that this downgrade of the US was kind of a ho-hum non-event. And we saw the interest rates. You would think in a normal environment, a riskier bond, a riskier loan, really all the Treasury note is a loan to the US government. So a riskier loan would typically, all things being equal, have a higher rate. We haven't seen rates really move up on the Treasuries over the last couple of days since the Fitch downgrade. So I do think that was somewhat of a non-event. What I do think we have to be aware of, there was an article in the Wall Street Journal this morning, is the amount of the revenue that's brought in by the United States government and how much of that is going toward debt service. That number has gone up remarkably, both in dollars and percentages, as well as a percentage of the total purse or the revenues from the United States Treasury through our tax regime. So we've got to be very aware of that. And it actually kind of makes sense that Fitch saw this recently and said, this is now becoming a problem. It's something we're going to likely have to do something about. The hard reality is that it means one of two things, right? We either need to raise taxes or cut spending or both. And I don't think that anyone in Congress or the White House wants to deal with that. But I think that's becoming a more pressing reality right now. You know, the risk is the higher the rates go on the long end of the curve, on the Treasury, where the U.S. government does issue debt, the higher that debt service is going to be going forward. And if you think about the existing debt the U.S. government has that they've issued over, let's say, the last 10 years, those were at those very low rates. And so as those come up for maturity and reprice, we may have some bigger challenges with debt service going forward. And I think that's what Fitch was trying to say, like, hey, it's not too late, but you guys need to pay attention to this, and we're concerned about it. And we're going to note that by downgrading the U.S. Credit rating. As far as the banks are concerned, it's very similar thought process where Fitch, I think, is being proactive. A lot of people were critical of the rating agencies, especially during the great financial crisis, because the number of AAA rated bonds went bad, which is unheard of. I think that in the current environment, people were somewhat critical of the fact that Silicon Valley Bank, Signature Bank, and First Republic had not been downgraded by those rating agencies, and all of a sudden they failed, they were gone. And so I think they are also trying to be proactive. In watching the market for banks, I would tell you that most investors have already priced in some of the concerns that were raised by Moody's yesterday. And those concerns relate to credit issues, concerns about office and other commercial real estate, some concerns about interest rates and the cost of funding for banks. But the truth of the matter is, I don't think that's really new news, if you will. I think they're a little bit behind in that story. I will tell you from the bank's experience, and also in talking to a number of other bankers, there's an opportunity for banks to come through this period of time very well. The banks that made it through this last period of time, there's brighter times on the horizon as some of our loans reprice. So as loans to our communities, loans to businesses, loans to individuals come up for maturity, and they either take out new loans or we give loans to someone else, or even invest those in bonds, we'll have higher yields, which will allow the bank's profit margins to go up. Now, if you're a borrower, that's not necessarily the best news story. But if you're a saver, there's a lot of really good news stories right now. I truly can't, I'm not selling right now. I can't believe some of the rates that we're offering today on different products that, you know, a year or two ago, I would have said, no way we're going to have a 5% CD special, but we do. So, you know, that whole world has changed quite a bit. But I think most of the banks have been managing through and have had time. And each month that passes, presuming the Federal Reserve doesn't raise much more, maybe they raise one more time, I think the banks are going to come through this pretty well. Is there a looming credit crunch? I don't know. It's hard to say. I think in isolated pockets of the economy, there may be. Housing has held up remarkably well. There's still an under allotment of housing. And I think that's going to support prices. We've also seen multifamily hospitality, i.e. hotels and restaurants, hold up remarkably well. People are out spending money, traveling, going in, eating out. So, you know, we could see some pain in office, but for banks our size, or as I said, the other banks that are local to this community, we don't have a lot of office exposure. Those loans were way too big for us. We're not doing $50 million skyscrapers in Seattle. Those loans are way outside of our bailiwick. So, you know, I think that will play out, but I think it's going to be fairly contained.
Gosh. Okay. Great. I see Colleen, you have a question. Go ahead. Maybe.
Hold on, I couldn't get off mute. Hey, Matt, Colleen with Habitat for Humanity. Thanks for being here today. We, Habitat's very excited to have a booth at your 100th celebration, so thank you for that.
You bet.
No surprise here. My question is, what kind of products and what kind of contribution is First Fed making toward affordable housing? For me, specifically here in Clallam County, but maybe just across your network. Any down payment assistance loans, anything else you have that is in support of affordable housing and in support of affordable housing development? Thanks.
You bet. Well, I mean, you're well aware, obviously, of the contribution that we made to the new project that Habitat is running in Sequim. We were there for the shovel, the digging out of the original event that we had about a month ago. We're looking to do projects. One of the challenges that I found from the time that I got here, and I know a number of you are well aware of this, we've got to find ways to build more housing in Port Angeles in particular. And this is not to dismiss the rest of the peninsula. I think there's a lot of opportunity, but there's an acute need in Port Angeles. We're seeing housing getting built in Sequim. There's a different layout of the land in Sequim. There's other activities that are going on, a whole array of reasons why that's happening. We've got to find ways to do this in Port Angeles. And I've been talking to a number of different folks in the community as well as outside of the community about how we get it done. It's going to be challenging to find the risk capital who's willing to come in, especially on the multifamily side, and be willing to invest with some uncertainty about what the returns might be with higher rates, with the perception of lower rents. I posit that a new product in Port Angeles could command somewhat higher rents than the existing product. And I realize that may not solve all the problems for affordability, but we need more supply at all points in the housing chain. If we have people who are needing to live here and they can afford to pay $2,000 a month, but there's nothing at that level, they're paying $1,600. Somebody who's paying $1,600 might be, might only wanted to pay $1,200, but we need to fill that in. We've got to build more housing at all points along the cycle. There's programs and projects that I know we're well aware of with Eric Tupar and others. I'm really hopeful that those things get done. I do believe there's an opportunity with a number of tax credit programs that are out there, low-income housing tax credit, new markets credit, OZs, whatever they are. We've got to find that way to do that. And I will tell you, and I've been telling everyone, we are committed to being the debt on that type of project if we can find it. We can't participate as an equity partner because of our charter, but we can provide the debt financing. If we can find that, absolutely, we want to be a part of that story. I believe in it. We've got to all pull together, the EDC, the city, the county, all the business leaders. We've got to figure out a solution for this problem. I know people have been talking about it. I'm really excited with, one of the main things I'm most excited about with Field Hall is that it's open and people can stop saying like, oh, it'll never get done. It'll never get done. Well, they're wrong, right? We got it open. We can do it. We can do it with housing too. As far as your question, Colleen, about programs, we do have down payment assistance grant programs from the Federal Home Loan Bank. We do have first-time homebuyer programs through Freddie Mac, and we would love to talk to anyone about these opportunities. We are highly committed to that. We absolutely want to be a part of that story and have those programs. And I know some of our other partner banks in the community have similar programs as well.
Great, thanks. Jim McIntyre.
Good morning, Matt, and congratulations on 100 years. That is a big deal, and you can supply your own adjective in between those numbers. But my question has to do with the regulatory environment that you're in right now. In particular, the market niche that you and your other competitor banks occupy, and it's a question about advocacy. I have a suspicion, and maybe you can confirm or debunk my suspicion that First Fed, which seems to be in pretty good financial shape, is getting swept up unnecessarily in regulatory activities that constrain your ability to do business that's not commensurate with your actual financial condition and the economic conditions around your area of business, so on and so forth. Am I, am I correct in having that notion, or is there some other advocacy position that we can take on your and other banks' behalf with our congressional delegation and the regulatory? I'm not even sure who your charter's with anymore and
Yeah.
who your regulator is, but anyway,
Yeah.
talk about that if you will.
Yeah, we're regulated by the State Department of Financial Institutions and the FDIC. And so the FDIC, our charter is in the state of Washington. We have a commercial bank charter in the state of Washington. The FDIC provides the deposit insurance, which is critically important. So a couple of things. We'd love any advocacy that we could get. I'll start with that. The regulatory environment is typically a reactive one. And there's two ways that happens. One is through the on-the-ground regulators and the regional offices for the FDIC, which is in San Francisco. They have a field office in Seattle, and then all the way up the chain back to Washington, D.C. with Marty Grunberg, who's the FDIC chair. A couple things have happened. Marty is more of a conventional bureaucrat. The woman that he succeeded, her name was Yelena McWilliams. She was a huge advocate for the banks, and Marty to a degree less so. And I'm not trying to say anything dismissive, but I will tell you that from that day forward, the regulatory environment got tougher. In addition to that, a lot of the regulators are being blamed for being asleep at the wheel with these bank failures that took place in March. Now, they were very isolated and they were quite unforeseen. And frankly, there's going to be books written about what happened here. It was like a surge wave that just came that nobody saw coming, and then went back out to sea. And it literally only affected those. It affected all of us, but it only, obviously, they only closed the 3 banks. So in that reactive result, I would tell you that yes, the regulatory environment has gotten more challenging. There's more scrutiny upon liquidity and interest rate risk than there has been, which then affects your earnings potentially and your capital. So there's no question that scrutiny has been turned up. I don't like to play the fair, not fair game. The reality is we have a job to do. We are going to continue to do that job. We're going to continue to find ways to provide better services and support our communities because we are about relationships. There's some distractions that are out there that relate to the regulatory environment and to a number of other things that go on around us. And so we have to be able to manage through that. The addition or the secondary thing that I think the response may be, and I'm not sure this is good, eventually Congress will look at what happened to Silicon Valley Bank and these others, and they may try to put more regulations on. We don't need more regulations. We need to be regulated. We don't need more regulations. We might need better regulations, but we keep adding to the pile of regs, and that creates challenges and distractions and problems as well. We are also a part of the Washington Bankers Association. They do an excellent job of providing advocacy for us in the state of Washington. We have a good relationship with the legislators in Olympia. We also participate with the WBA and the American Bankers Association for advocacy in Washington, D.C. And I'd love to be able to provide some information maybe after this call about ways that you can help to support your local banks. Over my career, I've been in banking, pretty much since 1997. And I've always heard, bankers always complain about regulations. They always complain about regulations. It's what we do, right? And so it's part of the deal. It's critically important that we have regulation. It's critically important that we have consumer protection and all of these things. It's trying to find that Goldilocks approach, right? There was a 8 or 9 year period where the regulators came in and it was a non-event. I mean, from 2012 to 2020, the exams were just like a cakewalk, and it was across the board, unless you were doing something really off track. And so, that's changed starting with COVID, and now subsequently there's a little bit more scrutiny. But I don't think it's something that we're going to allow to stop us from getting to where we're going as a bank and an institution and becoming a high-performing bank. And it certainly won't prevent us from serving our communities the way that we're committed to doing.
Great. Thank you, Matt. So Matt, and I'm going to say your name wrong. I'm sorry. Joik had a question in the chat. Matt, do you want to ask it or should I read it for you? Okay, he says, first, thank you for being here today, and also thank you for letting Nor'Wester Rotary use the stage before your event on September 2nd. Two questions. First, what has been the one thing that you think has been consistently throughout First Fed history that has helped you guys reach 100 years that you continue to see today? And secondly, what is the biggest challenge that First Fed faces as you transition to the next 100 years? That's great.
And Matt, I don't mean to correct you, but I want to make sure it's Sunday, September 3rd. So I know I don't want people showing up on the 2nd, but the event's on the 3rd. But as far as what we've done, I will tell you that I think we've largely tried to continue to be innovative, but also stick within our knitting. And so, this has been a fairly conservative culture for a really long time. And candidly, when the board brought me in, they wanted to be slightly less conservative, not because they wanted to be imprudent, but because they realized that the bank had an opportunity to improve its performance in terms of earnings and growth. And so, what I used to say is that on a risk scale of 1 to 10, the bank was a 2, and I was trying to get us to a 4. And so, really understanding how do we keep that risk reward modicum in line, because if you don't take any risk, you're not going to make any money. But I think that we've generally been fairly conservative. We've been very focused on our local communities and relationships. We continue to do that. At the same time, we're innovating, right? We've expanded further into Bellingham, Bellevue, obviously down into Silverdale and Bainbridge, while continuing to support and continue to grow our market share and market penetration in Clallam County and up here on the peninsula. Moving forward, I would tell you that changes, exogenous factors related to technology and our ability to at least keep up with those changes is going to be one of our biggest challenges. You can't go too fast into it. You don't want to be on the bleeding edge, but we certainly have to continue to adapt because of our consumer preferences, the customer preferences, the younger generations who may not be coming into the branch every day. They might want to come into the branch once a month or once a quarter when they have an important activity or event that they need to handle, but they may not be the ones that are coming in for the doggy snack or to stand there and talk about their morning or have their coffee in the branch. And so those changes are coming, right? Those changes are happening in real time. And we want to be able to provide, we talk about the power of and at our bank. We want to be able to provide that great relationship experience, one-to-one, in person, in a branch, or having someone come out to visit you, or when you call us on the phone, that we've got a great experience with our customer service center. We also want to make sure that you can do all the things you need to do on your phones. And I think we've done a really good job at that. We've just continued to enhance and add to our money movement capabilities there for, moving money from yourself to a friend or maybe to someone who does work for you, or to move money between your account here and your account somewhere else, or preferably to move your money from somewhere else to your account here. But we're allowing for you to do that in a much more dynamic way. And we have to continue to do that because we want to keep up with where the consumer preferences are going. But here's the deal. It's like the story of the lion and the gazelle, right? We just don't want to be the slowest gazelle. We need to be somewhere in the middle of that pack. We don't need to be the fastest gazelle, right? And that fastest gazelle might run off a cliff somewhere. So we want to be in the middle of that pack. We're continuing to progress in that direction. I'm excited about what we're doing. We've learned a lot. We've learned more than we care to learn in the last 3 years. Most of it very good, some of it painful, all of it valuable.
Great. Thank you. Julia, you had a question?
I do. Hang on. I have to figure out, I don't know how to lower my hand, so I'll deal with that later.
Yeah.
So quickly, I just wanted to comment. I use your banking app. It's actually very user friendly. So I appreciate that. I do way more with it than I probably should. So my question, I'm executive director at a local nonprofit here, and I've been getting a lot of conflicting, I know you're not selling, but I'm going to ask a sort of selly question. I'm getting lot of conflicting information about what to do. For instance, we've gotten a donation for designated funds. We aren't going to be able to use it until we get a little bit more in. So we need to put it somewhere. You know, designated funds you can't use except for this one specific thing, which isn't going to happen until probably next year. So having it sit in our operating account, that's no good. You know, I don't want it to get spent. So what, you know, you'd be surprised how many over the top suggestions I've gotten. One is close all bank accounts, buy gold. And I'm like, no, that's probably, I don't know. No, I don't think the board would approve that. So,
Good.
what would you say to someone like that? So, you know, nonprofit or someone that doesn't, you know, that has to be very conservative with their money.
Yeah, I'm biased, of course, but I would say, you know, let's get those funds into either a certificate of deposit or a higher yielding account. It can sit there separately. You can have it separated from your operating account. You can earn, again, up to 5% right now in that account, virtually guaranteed, right? Fully FDIC insured. If you're over $250,000 for anyone and you want additional insurance, we have ways to provide additional insurance through partnerships. Most of the banks have this feature now. Alternatively, you could look at investing in treasuries. You know, I talked about the treasury rates. They're much higher. We can also help you with that if you have an interest. So, you know, there's ways for you to do if I was responsible for, and I'm on the finance committee at Field Hall. So we have a very conservative approach to how we want to manage those funds. We have an endowment. We do manage that with some stocks and bonds, mostly with bonds. But I will tell you that I would not, I mean, gold's fine if that's something of interest. I would never put funds into gold that I was managing on behalf of a third party. I just don't, because it's volatile. It can go up and down quite a bit. And so, you know, what we're talking about, even with crypto and some of these other things, what people are saying is like the banking system and the US currency and all that other stuff is going to go away and you got to have an alternative. Well, if that happens, like, you're not going to have a not-for-profit. You're not going to be able to do your programs.
Right,
like, we're
right.
going to all be like, you know, it's going to be Lord of the Flies. And so I don't see that happening. And if it does, I'm not sure what that gold is going to do for you. So, you know, I would suggest highly secure bank funds or treasuries for now. And depending on how long until you think you might need to use that money would determine how long you'd go out in terms of the term on the investment that you made.
Thank you for parroting what my good sense was telling me.
You bet.
Very good. Thanks, Julia and Matt. So Matt, you've been with the bank for 4 years now. Can you share some of the initiatives that you have brought to First Fed Bank?
Sure. Yeah. The very first thing that we wanted to accomplish, or that I wanted to accomplish, was to empower our employees. And so, you know, we're in a highly regulated industry and there's a lot of rules, and you're making loans. So you don't want to make a loan to someone that you don't think can pay you back. And there's all these things, but we have all these talented folks. And so I wanted to really let them know that this was going to be about them and the things that they can do in the community through being empowered. There's still accountability for those things. You can't just willy-nilly start lending out money or, you know, doing things that are outside of the rules and regulations of banking. But we really wanted to do that and to really have a can-do attitude and a growth mindset. And I think we've done that. We've been able to grow the bank from about 1.2 billion to about 2.2 billion in assets over the last 4 years. We're really proud of that. I think we've done it in a prudent and responsible way. We had a lot of help during the pandemic from all the programs that were going on. That certainly was fortuitous timing for us in a period of wanting to grow. We're now growing at a little bit slower rate. I think that's also prudent and appropriate. We have really invested a lot in technology. A lot of the things that these folks don't necessarily see behind the scenes to integrate our systems, to be able to offer a number of products and services. So, you know, I think we've got a really easy online account opening platform now that you can open an account in 5 minutes. You can apply for a mortgage loan online. You can apply for a commercial loan online. You can apply for a consumer loan online. Those things we've continued to upgrade and enhance. I talked about money movement. we've really been building out our treasury team. So for the non-for-profits, for the small to medium-sized businesses, in 2019, we didn't really have a commercial deposit focused team. Well, we call that treasury management. That's just a fancy word for business deposits. So when you hear treasury, that's really what it is. We were offering those through our branches. We had some really talented people who understood those products, but they had a number of hats that they wore. They were doing consumer loans. They were doing home equity loans. They were doing consumer deposit products. We wanted to have specialists who were subject matter experts on small to medium-sized businesses, money movement, and their deposit accounts. We've now built that team out where we have a separate operations department servicing that team. We have a director and 5 treasury management officers who are solely focused on business development on the treasury side, the small business side. I think that's huge. For us, we were okay at it. We just kind of did it. The businesses, we just opened accounts for them. Now we're becoming really good at it. And I think this is a tremendous opportunity for the bank as we move forward, and for the community. We can compete with all the banks that are out there, even the Chases and the B of A's, for the small businesses in our community. And we can do it with local talent and much more high touch relationship banking that people are accustomed to on the consumer side.
Mm-hmm. So that's amazing. It went from 1.2 to 2.2 billion. Was that additional billion of deposit growth from expansion in other counties, or was a lot of it in Clallam as well? The highest dollars of growth and percentage of growth was in Clallam County. Well, we have done really well in Silverdale and Bellingham, but our bread and butter has been here. Now those branches have had the toughest time over the last 12 months as the rate environment has changed. What I like to say is where the money came in is where it's flowed out. So we've had growth in the last 9 months, primarily in our new markets. We've been kind of treading water in our historical markets. I still think that it's a win for us to have our local branches. If you look at their growth over a 3 to 5 year horizon, they've done phenomenally well. I saw the question, is it new money? I would tell you that the stimulus new to Clallam. I would tell you that the stimulus programs that happened, again, whether or not it was PPP or whether or not it was the unemployment benefits or all the different programs that were run, that was money that came into people's wallets and accounts in Clallam County. We're seeing nice in-migration into the county as well. We've seen growth in the county. We've also seen some of our businesses do remarkably well. We've got some really successful businesses in Clallam who are building up their cash balances. And we have other businesses, as Colleen is really intimately involved with, that are coming into the county. And so that is also new money in the county. We have more money coming into the county through tourism and travel and those types of things. And so there's a whole array of reasons why. I would tell you that the combination of the money that came in, some of it was people that have been here for a long time that were just receiving funds or maybe not spending as much. And then also people who are moving into the community or businesses coming into the community who are doing well and also who are getting some of that stimulus support. Got it. Thank you. Yeah. So Debbie, you have a question? Do you want to ask it or should I read it? Debbie asks, going back to the regulatory question, when will the regional banks be mandated to join the Fed now?
All right. I'm so glad you asked this question. There is a serious misunderstanding about Fed now and central bank digital currency. And I want to make sure if you hear anything else, I'd love to have you in my office and we can have coffee and I can talk about this more. And I'm certainly not trying to be condescending or dismissive of the question, but I want people to understand. I have heard a number of people that think, oh my gosh, we're doing away with the dollar. Everything's digital, and FedNow is the step towards that. FedNow is the existing ACH system, the money, you ever gotten direct deposit, or you ever made an online bill payment, or you've ever had a third party take money out of your account to pay a bill. It's the same system, only faster. So they've taken that system. Historically, that ACH automated clearinghouse system took 2 days. So a payment would get originated today and it would settle on Friday. Okay. over the last several years, they've advanced the system for payment speeds where they had next day ACH, meaning originated today, arrives tomorrow. They've gone now recently to same day ACH, and you can imagine what that means. And now they've gone to real time or Fed now. That's all that it is. And I appreciate people's concerns. Your information's already out there. The people saying like, oh, the Fed's going to know everything and they're going to control everything. And it's like that horse left the barn a long time ago. And your bank is protecting your information. And so we have to do that. But to think that all of a sudden moving that money more quickly all of a sudden changes the dynamic of the power and control of the Federal Reserve, who most people could argue is already the most powerful institution in the world, it hasn't changed, right? And so I think that it's important to understand that central bank digital currency could happen. It's not there yet. I think it's a long way away. Fed now took almost 10 years from ideation to come to fruition. It's a great thing, right? Think about if you have money coming into your account and you need to pay someone else and you don't know when that's going to arrive, that can be a problem. What if you sent the money out too soon? You could have a negative overdraw fee. You could have that item returned. That would be very embarrassing. If you know the money is going to be there right now and then you can pass it to the next person, isn't that great? Isn't the thing that people care about with payments and money movement speed and certainty, right? That's why we like cash. Cash is fast, it's immediate, and it's certain. And so people like that. Now there's issues with cash in terms of security. Someone could rob you or whatever, but you have to handle the cash and you have to move it. I mean, so it's exciting and it's actually highly convenient to have something like Fed now that's immediate and highly certain. But there's risks to it for sure. If you're sending money, once it's gone, it's gone. It's like a wire, right? That money's gone. So there's risks to it. All four paces of money movement still exist today. Traditional ACH, next day, same day, and Fed now. They all still exist. We use them all. There's different needs for different folks. The checks in the mail, the float times are definitely gotten a lot slower. Anyway, if anyone wants to talk about CDBC, central bank digital currency, I'd love to talk about it. But just please be assured, Fed now is not that. I know that people have read that and heard that. I've heard it from lots of people. We're not there yet, but you know, there's a lot of most things are happening digitally already. I'll tell you that, and so those risks that may exist in the future likely exist today.
Matthew, I would like that appointment, please.
All right, Debbie. You want to take my cell number?
Sure.
I'll get it to you, Debbie. I
All
can
right,
get
thank
it to
you.
you.
Thank you.
Okay. One,
Can I qualify my background, Colleen?
Oh, sure.
I started out in banking at Union Bank in California in 1972. Went into private accounting afterwards. However, back then in 72, they were already talking about a cashless society.
Yeah.
And so, I mean, these are just things that have moved along in the last 50 years. So, and I've just been an observer of it for a long time. So that's why I'm asking these questions.
Absolutely. And you're absolutely right. And we have moved a long way toward less cash. But there's still a lot of people using cash. Anyway, we'd love to have that conversation, Debbie. Would love to have you.
Great. Have a great day, Matt.
Thank you.
so one last thing, Matt. We have about 4 minutes left. So I remember reading about how at the federal level there were some committee meetings about how banking processes are unfair to the poor, that the fees associated with overdrafts and the like put a lot more challenge on those that live at the bottom rung of the ladder. And in the world of diversity, equity, and inclusion, and trying to create a more fair society, there's been discussion about eliminating some of these fees for depositors that have a really low continual balance. Can you speak to that at all?
Sure. My hot take is what's far worse is the lottery system across the country, and that should be banished. They're stealing money from the poor. Anyway, I won't go off on that. I would tell you that banks have already made a tremendous amount of reductions and in many cases, eliminations of overdraft fees or what are called NSF fees. Some of that through regulatory requirements, but much of it of our own volition and our own business decisions. It's a really tough question. There are people who rely on the bank paying their items and are incredibly passionate and willing to pay those fees because the consequences of not paying their rent or the consequences of not paying their heat or whatever bill that is can be more expensive and more damaging. And so they may be very willing to pay a $25 or $30 fee for the convenience. Is that appropriate? It's not for us to decide. People spend money on all kinds of things, check cashing, payday advance loans, credit card advances that cost them far more than the bank NSF and OD fees. But we've done a lot in that area. The bank ourselves has done a lot in that area. We have eliminated fees on returned items that we don't pay. I think that was particularly punitive and probably should have been addressed a long time. And it's a shame on the banking industry for not handling that earlier. So we return your item, you don't get the benefit of that, and we hit you with a fee. That's pretty bad. And we've done away with those entirely. So if we return your item for whatever reason, we will not charge you a fee. We do still charge a service fee for paying the item. And I think there's value there. Are there other ways that we can coach and train and help our customers? Absolutely. Do I think that more regulation is going to lead to better outcomes for the less fortunate? I really don't. I think it comes down to education and training. I think it comes down to the banks really focusing on the programs of serving the underserved and the underbanked. We've got a high hill to climb because a lot of folks don't trust the banks, and that's somewhat our fault. So they're not going to walk into a bank, right? They're not going to walk into a bank. We have programs. We have a new account program called Compass Checking that we very rarely open because people that we open the accounts don't come in. So we've got to offer that online, and we got to go find the people where they are. We offer a credit builder product where we'll extend to you, let's say, $1,000 secured loan where you can pay that off over 12 months. It has multiple benefits. First of all, it's forced savings. But second of all, most importantly, you can improve your credit score or create a credit score if you don't have one that's virtually risk-free to the bank and very low risk for you. And at the end of that $1,000, let's say you pay the $1,000 off, $85 or $90 a month for 12 months. At the end of 12 months, you have $1,000 savings account. That money is now yours. We'll release the hold on that fund. So there's programs like that help. We all need forced savings, right? If I didn't have my 401k money taken out of my check every 2 weeks, I'd spend it. So we need those forced little nudges and those automated things so that we don't we get ahead of our worst selves. And so that's the truth for everybody, anywhere on the chain, no matter how much you make. It's really about managing your finances and your spending and your savings and your investing that I think is really important. And Debbie, the education, the financial ed piece is a big part of what we're trying to continue to do. We need to do even more. We have a partnership with a company called Financial Beginnings that we intend to continue to build out that we're really excited about. But the entire society has to do more in that regard.
Yeah. All right. Well, hey, thank you very much. And I'll have my son think a few of these lessons.
Absolutely. You can have coffee with me anytime also.
Okay. All right. Hey, thank you so much for joining us today, and everyone else. We really appreciate your time and your thoughtfulness and also your commitment to our community. So with that, I'm going to call it a morning and wish you guys a great day. Thanks everyone.
Colleen. Appreciate it.
Thank you. Bye-bye.
Bye-bye.